Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets under significant pressure today. We've got the U.S. markets, the Dow, S&P, and NASDAQ down by about 2 to 3.5%. The Russell 2000, which represents the small cap companies in the United States, is down even more. The TSX right now, midday on Thursday, is down by about 2.7%. Most major sectors underwater, and the Canadian dollar is lower versus the US dollar. Now, of course, the big news this week and the reason for all of the market volatility is the US Federal Reserve yesterday raising rates by 75 basis points. Interestingly, the market actually rallied following this. Perhaps it was a bit of a relief rally, but just momentarily, because today, as I mentioned, we are in negative territory again. Interestingly, though, the U.S. Fed Chair Jerome Powell did suggest once again that the peak Fed funds rate would be 3.8%. So that is almost somewhat dovish, despite the fact that he raised rates and there's concern that we will continue to see higher rates. Now, all of this is on the back of the U.S. Federal Reserve trying to combat inflation by raising rates, decreasing demand or the economic activity. The concern, of course, that is all at the same time that perhaps we are seeing a little bit of a slowdown in the broader economy. In fact, the Philly Fed manufacturing data contracted for the first time since May of 2020. May housing starts in the United States were also below expectations, and the initial jobless claims actually were higher versus expectations. So again, there is a concern that we are entering an aggressive Fed tightening cycle at a time when the economy is actually already slowing down. Add to that, the other real concern here, of course, is that can you really combat inflation, i.e., the price of energy as well as food costs, given the fact that one of the key drivers of this is what we're seeing over in Ukraine. And of course, the difficulty from an energy perspective that the European economy is having, and of course, also in the United States and Canada in terms of the cost of fuel. So even if you raise rates, can you really combat inflation and the higher input costs? A lot of investors are really questioning that right now. There are also, to add to the concerns out there right now, a number of Wall Street strategists suggesting that that corporate earnings have to come down because of these higher input costs and because the economy is slowing. So if you have to lower the earnings, that could put, again, downward pressure on the overall stock market. Now, I would point out, though, on perhaps a bit of a positive note, that when you do see these major drawdowns in the market day after day, which we have been seeing, at some point there are some interesting buying opportunities. You're also getting a little bit of comments surrounding that. But also when you see these big moves, it's important to point out that it doesn't mean that the most experienced professionals, large cap money managers, are selling their positions in perhaps funds that you own. They might just be sitting and holding tight. But what can happen is hedge funds have to often unwind their positions in order to raise funds for redemptions that their clients might want. They might want to redeem their dollars. And hedge funds tend to have levered positions. So when you lever up your holdings, the unwind of that can have exacerbated moves in the market and the marketplace. So I'll leave you with that. Certainly a lot going on. I'd also point out as well that there are expectations that the BOC, the Bank of Canada, will also follow suit and follow the Fed in terms of raising rates, perhaps 75 basis points. And also, interestingly, there's concerns out there right now that more central bankers will be doing the exact same thing. We actually had 3 central banks around the world raise rates today, again, following the Fed's moves yesterday. I'll leave it there, Nima. Back to you.
All right, thanks for that, Catherine. For more analysis and news on the markets, tune in to Catherine Murray on The Buck Stops Here.